So I'm back giving a tutorial on BitMEX, and I've been using BitMEX for around a month. So I think now I'm better equipped to do a tutorial because previously when I made my last tutorial, I only have been using it for a week. So it might not be as clear as how the instructions should be like when it comes to using BitMEX. And yeah, so I started off with actually 1 Bitcoin, and then I managed to win all my way up to around 3 Bitcoin. And last week I did a super bad mistake and lost 2.5 Bitcoin out of my 3 Bitcoin, and I was left with 0.5 Bitcoin, and now I'm up to 0.8 Bitcoin. So if you think about it, I'm almost back to square one, and the reason is because I made a huge mistake which could have been avoided for sure. Now that I'm more better equipped at how I manage my trades. So just let me try to give a basic tutorial on how um, BitMEX can be used to leverage on the little amount of Bitcoin that you have in hopes for better gains. Okay. However, that said, BitMEX I don't think is for everyone because it is very risky and you have to be really good at analyzing how you look at the market. Okay. Okay, so basically, before I begin, you can just if you haven't created a BitMEX account, you can create, and if you already have, you can just feel free to log in after this session. And okay, so to start off, you look at this middle section. That is basically the price of the Bitcoin contract. If you realize the price is not equivalent to the Bitcoin price, for example, the Bitcoin price is now at around 7740, 7739, but however, the contract is worth 7762. The main reason why the values are different is simply because right now we are trading on the Bitcoin contract and not Bitcoin. But their price are relatively similar. It's just that this is the you can take it as this is like the Bitcoin price that we're currently trading at this platform is known as XBT, okay, instead of BTC. But it kind of means the same thing. Okay, so yeah, to start off, this is like the chart that you'll be looking at. Okay, it's the same thing as like trading view. You can sort it to like whichever time frame you want, and whichever indicators that you want to use. Yeah, so it's kind of like the same thing. And these are the order books. Okay, I think somehow you can just actually ignore the order books because it moves so fast, so it's hard to catch a pattern. Yeah, but most important is I think just using this graph to look at some TAs and just based on which indicators that you prefer. For me, it's RSI and Bollinger's Band. Okay, so on the left side, this is where you place your order. You could place either a market order or a limit order. Market order meaning you just buy at the current market price that is at. So there's two things you can do: long, which is buy, or sell, which is short. Basically, if you feel that the next candle is going to be green and it's going to go up, you buy it, you long. And if you feel that it's going to go down, you short. It's as simple as that. Okay. But do note, every time you open a position, either through longing, buying, or selling, shorting, you got to close the position at the end of the day. Okay. So the difference between limit and market is mainly the market you purchase from the market itself, the directly buying from the transaction. For the limit, you place your order, so your orders will be like here or here, depending on whether you're buying or when you're selling. So you'll get triggered. Okay, so I would say that there isn't like the best way to do which, because each have its pros and cons. Limit sell or limit buy, you might be able to get it at a discounted price, but that said, you might sometimes miss the point of entry. Whereas for market, you get to buy immediately, so you have no issues of trying to miss the entry. And the next thing we're gonna talk about is how you place your order. Assuming I have around 0.8 Bitcoin, that is around let me see, that's around 6,000 USD. Okay, so the good thing about BitMEX is that you can leverage on any amount that you want. So assuming I want to, with the $6,000 I have, I want to do like a 60,000 purchase. Okay, I can easily do it. just by shifting the leverage to around 10 times and buy. So what happens is after you buy, you can see that the leverage is 10 times based on what I've assigned earlier on, and the order value is 7.7 Bitcoin, which is around 60,000 USD. Okay, and also not only that, the cost for this transaction is 0.7863. So basically, using 0.7 Bitcoin, around 0.7 Bitcoin, I can actually purchase the contract of up to 7 to 8 Bitcoin if I leverage 10 times. Okay, one thing to take note is that there's also this estimated liquidation price. Basically, what it means is that if the Bitcoin ever hit this price, you're going to be liquidating your assets. Okay, so you realize if I shift this up to 25, okay, you realize that the cost of this contract is lower, meaning I only need to use 0.3 Bitcoin to get 60,000 USD worth of Bitcoin, and my liquidation price, you realize, have increased from 7,000 to 7,489. What happens during liquidation is that when it hits this price, you're going to lose everything that you have. So it's important to use like lower leverages to lower the estimated liquidation price. But if you're more of a risk taker, you can even go for like 100 times leverage. So I was able to use 0.08 Bitcoin to buy around 7.7 Bitcoin worth, which is like around 60,000 worth of BTC. However, the moment it drops by, okay, right now you look at the price is 5.7, right? The moment it drops by $40, I'm gonna lose everything. So it's kind of like a very high risk move. And this is something that I actually did by mistake, because I didn't estimate my risk, because simply last week Bitcoin was very volatile, and I managed to catch a lot of earnings based on the different price movement. But what happened was that I did a 100 times leverage on shorting a Bitcoin. And let me just show you what happened. Okay, so let's just look at okay, so something like this happened. Okay, so basically I knew that okay, Bitcoin is gonna continue like falling down from here. So what I did was that I shorted around this level, okay, when it was like somewhere greenish here, yep, around like 7795. And what happened was that the price shot up by $200 for nothing, almost $200 for nothing, and I got liquidated immediately. So basically I short the position here, but because I did 100 times, because I knew it was going to go down because it was way too high, there was going to be a retracement somewhat, but simply because I shorted at 100 times, the liquidation value was very close to the actual value, so I got liquidated immediately. So if I've done something like maybe like 50 times, like or even 25 times, you realize the estimated liquidation value change, I wouldn't have like lost like around 2.5 Bitcoin. I would have in fact maybe even earn like another 2 or 3 Bitcoin. So that was a mistake that I did. So one advice for people is simply, if let's say that you're gonna try your first time at BitMEX, it's important to go for position that are like 5 times, 10 times, or 25 times. And only if you're comfortable and you feel that oh, you're actually doing well at this BitMEX, you can try for 50 or 100 times. Do bear in mind is that the values that you're going to invest will be here. So for example, I want to use $300 to leverage 10 times on $3,000. I do not key in $300 here. I key in 3,000. I make a 10 times. Either I long, buy, or I short sell. Yeah. So this, I'm using $300 to leverage on my position to get around $3,000 worth of Bitcoin. So let me just repeat, if you want to use $300 to leverage 10 times to get $3,000 worth of Bitcoin, either you're selling or buying, you key in 3,000 here and not 300 here. So let me just give another example. If let's say you're going to leverage 25 times, you want to use $40 to leverage 25 times to get $1,000 to either long or short. You don't key in 25 here, you don't key in 40 here, you key in 1,000 here, you leverage 25 times, you long or you short, and then you'll be only using $40. Okay, so basically this is how BitMEX work. And yeah, so what I recommend is that before you start, you use like 5 times or 10 times. Try not to go beyond this too, just in case you get liquidated. And if you feel you're more confident, then you can just proceed more. Okay, so so basically this is like the rough idea of how BitMEX actually works. And okay, let's just move to the screen. Assuming you feel that, oh, okay, Bitcoin is going to drop from here. So what I would simply do is, I'm just doing it as a test example. So I'm just going to use like $20, okay? So I'm going to do like 10 times. So I'm using $2. So I'm going to short it, right, at the market, okay, because I feel it's going to go down 10 times. So because you can see, it cost me only 0.002 Bitcoin for this $20 worth of shorting. And my estimated liquidation value is 8577. So it means that if I sell it thinking it's going to go down, if it goes up to 8577, I'm going to lose all my money, which is like $2. So I'm going to just open the position. So it's like lagging. Not sure why is it lagging. Let me just refresh it a little bit. Okay, shut it. Okay, so once I've sold the contract, it's going to be here. So basically the size, you can take it as the USD. So I sold $20 worth of Bitcoin at 7766. So that if it drops below this, I'm going to be profitable. Okay, and if it goes above, I'm going to start losing money. But I'm not going to lose money until it liquidates or I close my position. So from here, you can see like how much money you're actually earning, your ROE, and that your realized P&L and the margins you're using, which is like 10 times. So just because for this experiment, I'm just going to just close it because to show you guys how it's done. So assuming I short it at 7766. So once it hits like below this, like maybe at 7600 or 7500, I can choose to close it. Okay, let me just close the market. So it closed immediately, just based on the left side when the value dropped. So close it. So that's it. So basically that's what you do, and then you can check available balance to see like how much you have actually gained. And yeah, one thing is that due to I think the transaction cost is pretty low. It's less than 1%, but still, before you close any contract, make sure the position runs for a while. So assuming I'm shorting at this level, I do not want to close a position until it actually drops by $20 to $30. Because if it only drops like $5 and I close the position, basically I'm paying everything that I gain into the transaction fee. So and yeah, so vice versa for long, if I feel that oh, this is gonna go up, okay, so I'm gonna use $20. I'm gonna use $2. Okay, so let me actually change it. I'll use $4 to leverage 5 times to get $20. So I buy at the market. Okay, so I buy. So you can see a liquidation price. If it drops below this, I'm gonna lose. But if it goes anything above 7766, I'm gonna make money. Okay. So assuming I'm gonna close the position, I just press market, close it, and sell. Okay. So basically that's how BitMEX work, and I hope you guys learned something from this. And if you're going to sign up a BitMEX account, you can use the link that I'll be pasting below on the description. There's actually a 10% reduction in the transaction fee for the next 6 months if you use that code. And also you can use tradingview.com to actually do your TAs. I'll be putting that link below as well. Okay, hope you learned something from it. If there's anything that you'd like to see